There it goes.
Hi everyone, Roxy and Sean here, bringing you a monthly video about what's top of mind in Bay Area real estate. Obviously, the big question on everyone's mind, how is our new tax plan actually impacting the market? And how is it really impacting you as a buyer or a seller? There have been a lot of changes to the tax plan before it was finalized, so there's been a lot of confusion, and we're excited to come and clarify it for you.
Yes.
So before we start, first things first, everyone's situation is different, it's personal, so please consult a tax advisor if you have really specific questions. But as a general overview, there are really three things that we feel like you should consider, and we're trying to take you out of thinking into the little details to the big picture of really what is the bottom line. So we're going to talk about these three things on two levels. First, the state level and also the federal level, because the changes have actually come at a federal level and not a state level.
Yeah, so one thing that I think everyone glanced over, I did for sure, is the state didn't change. We're in California. They have not followed suit to the federal changes, so we'll just go over each one line for line. What I found is this was the number one concern with a lot of buyers, is what's going to happen from a tax perspective if I buy a home next year, and we're just going to cover what things look like.
Great. So first is the mortgage interest deduction. On a federal level, it used to be $1 million, and initially the first plan had it decreased by half to $500,000. Good news is that it actually only decreased by 25% to $750,000. So you still get that full write-off on a federal level for $750,000 mortgage.
So what that means, so if you have a mortgage that is $1 million or more, or $760,000, you still get the mortgage interest deduction, just it's capped at at $750,000. So you're taking it up to that $750,000 mark. Some people thought, if my loan's over $750,000, I don't get anything. So you get the benefit, but it is capped at $750,000, which is great. It's better than what they were talking about doing down to $500,000.
Yeah, and at a state level, you still get the full $1.1 million deduction. So that has not changed, and that's both for your primary and secondary residence. Secondary being like a vacation home, not an investment property.
Correct. Right.
Yeah.
And it's important. So what we're trying to do is present information that we have readily available to us now. The state may make changes. I don't think they will. My personal bet, and this is just my personal opinion, is we'll either stay as we are in the state of California, or it may improve to contradict the federal plan, but we'll see what happens. So for now, this message is completely based upon what the rules are right this minute.
Yeah, and then, all right, second, your property tax deduction. So this is probably where the largest change has come. Previously, on a federal level, it was not capped at all. Now it is capped at $10,000. So, if you're buying a house around $1 million, it really won't make a change. But anything above that, you won't be able to deduct past that $10,000 mark.
On the federal side.
On the federal side, yeah.
So with the federal side of things, they said the maximum itemized deduction, or state and local tax, SALT. So state and local tax deduction is limited to $10,000. So with California state income tax, odds are most people will utilize that $10,000 through their state income tax, meaning that the property tax deduction is no longer there because it was used up by other things. But from a state perspective, you still have full benefit. So you still get your full tax benefit of property taxes at the state level. So 9.3% tax bracket, 10.3, whatever you are, that's still there. And we want to make sure everyone knows that these federal caps did not come into the California play.
Yeah. All right, and the last and third item we'd like to discuss is your capital gains benefit for owner-occupied property. So that's primary residence, and this is about when you're going to sell. So if you have lived in your home for 2 out of the 5 years that you've owned it, you can take advantage of this benefit. And that means a single person up to $250,000 benefit, and a joint filers $500,000. So that means if you bought your house for $500,000 and you're a single person, if you sell it for $750,000, you won't be paying any capital gains on that. Initially in the new tax bill, they had this increasing to you had to have lived in a house for 5 out of 8 years. Obviously, with how quickly our market moves here, how quickly things can appreciate, and most people staying in homes for about 8 years, that would have been a drastic shift. So luckily, it stayed the same for 2 out of the 5 years, so that was a huge win.
Yeah, so if you're married, you get up to $500,000 tax-free when you sell. If you're single, if you're filing jointly, you get up to $500,000. If you're single filing, you get up to $250,000 tax-free. So if you bought a home in, what year is it, 2018? So if you bought a home in 2016 and you're going to sell this year and 24 months has passed, you would get that tax-free. So that is, again, a big win over what was initially proposed.
Yeah. So these are the 3 really main points that we wanted to discuss today. There's still, other things that you may have questions about. If you do, share your questions in the comments below. We'll answer them as best we can, but like I said, it's always best to talk to a tax professional, consult a professional. And then the last thing we want to answer is, how is it actually impacting the market? The year has just begun. We're into the second week of January and nothing has slowed down. So a lot of people were predicting, okay, the market's going to change and soften with these the new tax plan. From both of our experiences thus far in the year, it has not. In the first week of the year, I've made 3 offers and everything is still extremely hot. Prices are still appreciating rapidly, multiple offers on everything. Sean?
Yeah, I have more buyers in the first, I guess we're in the second week, so in the first 10 days of the year, more people that are wanting to get pre-approved want to buy a home. Again, the tax benefit is still there. You still have mortgage interest deductions. You still have property tax deductions. There's still a very big benefit over renting from that perspective. So it's not the media made this out to be a very, very big deal. And there is so much to this plan. We're just talking about a small piece of it. But from a real estate perspective, there's still a lot of benefit even under this new tax plan.
Yeah.
So we want to make you guys aware of it. Make sure you know. But the other question of, is the market going to soften? Doesn't seem like it. It seems more competitive already than it was. So it's a good sign.
Yeah, and I'll be releasing some end of the year market stats soon just to show you what an insane year it was last year and how we're trending for this year. And we'll be back next month to talk about new hot topic. If you have suggestions or recommendations, send them our way. We'd love to hear your feedback.
Right
Have
on.
a good day.
Bye, you guys.
Bye.